Hello and welcome, everyone. My name is Rikard Engberg, and I'm an equity research analyst here at Erik Penser Bank. With me, I have Jessica Skon, CEO of BTS Group, who has just released their earnings. Jessica, welcome.
Thank you.
So, my first question is, can you please summarize the last quarter in a couple of sentences?
Sure. I would say the third quarter felt similar to the second in terms of the customer cautiousness that we'd been experiencing in North America all year, unfortunately extended into the second quarter in Europe and some markets and other markets. And despite that cautiousness, we were able to maintain flat or -1%, which we're not happy about, but that's where we are in terms of top line. And then I'd say our cost and efficiency initiatives are continuing to proceed as planned.
Okay, great. And can you please elaborate a bit on how the Bode acquisition performed during the quarter?
Yeah, really well. Both top line and bottom line. It's just slightly better than their performance in the second quarter. So they're continuing to perform well. They also won 5 new clients in the quarter, and they also grew the BTS revenue stream into their existing accounts. So it's progressing as planned.
Okay, great. And you're initiating the guidance for full year 2023. Can you please, elaborate a bit on the main reason for you believing in such a strong finishing of the year?
Yeah, I'm happy to. The main reason is the full realization of the cost savings from the efficiency initiatives that we put in place in the first quarter. It takes a few quarters to come into full effect, and that's the plan in the fourth quarter.
Okay, great. And if we talk about the last quarter, can you please describe what sort of what industries have performed well during the quarter and maybe not so well?
Yeah, there's 3 that have performed particularly well. It's biopharma, energy, and CPG. And tech and software continue to not perform well in the third quarter. I would also say professional services did not perform well for us as well in the third quarter.
And as a follow-up, do you see if we look at the tech and software industry, it was where it started with a bit of a downturn. Do you see any change in the climate of those clients right now?
Yeah, in particular in the tech and software industry, I would say we have started to experience a shift, especially maybe in the last 4 to 5 weeks of the third quarter. I would characterize the shift as some of those companies there's movement, right? They're moving forward with certain initiatives. They're putting in place budgets for next year. They're planning to do company offsites, sales offsites to kick off the year. So it's evolved from at the beginning of the year, a kind of more of a frozen, stalled state because of all of the layoffs and the org redesigns into movement now. And I wouldn't say it's across the board. And there's still conservatism and thoughtfulness and budgeting and so forth, but we are experiencing more movement, which means more movement in our sales pipeline than we experienced in the first half of the year.
And if we look at the overall market that you're on, are you feeling that you're gaining momentum and market share compared to other competitors?
Yeah, we do feel that, or we do believe that. Some of the evidence points for that is the actual win rates, the win ratios in North America and most of the world have stayed the same and even improved a little bit this year. Europe had a tougher time in the second quarter, but their win rates are back up to normal right now. If we look at new client acquisition, North America has brought in 41 new customers, other markets 91, and Europe 18 this year. Another thing we look at is deal size. Right. And for North America and other markets, the deal sizes have increased this year, which is another really good sign. So I think given those data points, it makes me feel confident that we are taking share. We just need big enough pipelines to make up for the projects that get delayed.
Okay, great. And if the market, so to say, was starting to expand, do you feel that you have the capacity to meet an increased demand from your clients?
Yes, we took a snapshot of our overall annual capacity in early October, and that tells us that globally we have the ability to grow 10 to 12% with our existing headcount. So that's the most important data point there. The other thing to keep in mind is that we have a very large base of external talent who are part-time associates with BTS. And we can ramp that up, and we can also slow that down as needed.
Okay, great. And finally, we discussed this in an earlier quarter, but can you please elaborate a bit on how are you starting to use AI in your business and how it will affect your productivity?
Sure. So, I mean, we have actually innovated new services to help our clients with their AI, but I think your question is specifically how are we using it internally and what might the productivity gains be? Starting in May and June of this year, we opened up basically generative AI large language model training, as well as a consultant's handbook to everybody in the company, and have had really quick adoption across all practices, functions, and the generalist consultant population as well. So I'm proud in terms of the grassroots exposure and tinkering that's been going on. We have experiments underway, as I mentioned, in every function and practice. And what will be really interesting for me is in the next 3 weeks, I have required all of those leaders to submit the productivity gains expected next year in our annual planning. So then I will see exactly what the material impacts might be for next year, and then we can actually do something about it. That said, we've had a lot of breakthrough efficiencies in our digital team in terms of time it takes us to actually write bots that we use in some of our core services, from 18 months to 4 weeks, for example, which is really significant. Our assessment practice is another one where it's pretty timely for them to create reports, and that's been reduced by as much as 75% for about 20% of the revenues that we do for that in that COE. Our simulation builders are working on experience right now to reduce the time to code and build the sims. We're seeing save time in doing client research. And then even in our super custom e-learning teams, they're kind of re-looking at their production flows and using generative AI to speed up some of the upfront design work. Those are just examples, but there's a lot of tinkering going around the company, and I will see how it's codified in terms of next year's implications in the next few weeks.
Okay, great. Jessica, thank you for taking this interview. We're also here at Erik Penser Bank. And thank you everyone who's been listening.
Thank you, Rikard. Have a great day.
Yeah.